Welcome back to Intelligent Investment Today, the podcast concerned with all things value investment. In each episode, we take a different topic from the world of investment and attempt to apply the lessons as laid down by the father of the craft, Benjamin Graham, to the problem at hand. In this episode, we'll be taking a look at one of the most exotic, interesting, as well as misunderstood business sectors out there. We are talking of the airline industry. We'll be considering its history, its prime features, and its attractiveness as an investment destination for the value investor, whilst all the time leaning on the rules of value investment to draw clear and precise conclusions. So without further ado, let's dive straight on in. As ever, sit back, buckle up, and get ready to take on board another lesson in value investment as inspired by Benjamin Graham. There's no doubt about it. Even today, when airline travel can be anything but glamorous, airlines still have about them an element of glamour. There is something exotic about the idea of these winged tin cans whisking you away to exciting destinations new. And investors too remain as susceptible now to the industry's charms as they were way back when air travel was the preserve of the rich and famous, and when the odd wing falling off mid-flight was pretty much a pre-flight presupposition. But here's the thing. Despite the continued popularity of the airline industry as a venue for investment, it has been anything but kind to the investor's pocketbook. There is the old legendary tale that circulates, speculating that the industry, taken collectively, over its entire history, has never turned a net profit. It is impossible to know if this is true or not, but the very fact the story exists should be proof enough that this has hardly been the industry par excellence as far as a capitalist has been concerned. So why might this be so? Objectively and on paper, the industry sounds like a pretty attractive one. And it's certainly been a huge growth story in terms of passenger numbers, with numbers up around sevenfold since 1970. And this is a growth story that is still very much alive and in motion today, as every year millions more people join the ranks of the middle class. The main problem seems to have been that the huge rate of growth in passenger numbers has generally been outstripped by the rise in available seats. This overcapacity has resulted in intense price wars that has driven prices ever lower. Whilst this has been a boon to the flyer, it's not exactly been conducive in improving the industry's bottom line. This perhaps comes back to the perceived glamour of the industry. Business people, for some reason, have a strange penchant for founding and operating airlines in a way they perhaps don't about setting up waste management businesses, for instance. And every one of these business people think that they can do a better job of it, despite a plethora of evidence to the contrary. But regardless of whether this fact is true or not, the fact is we have more airlines than we need. We have more seats than we need. And because of this, the airlines need to maintain wafer-thin profit margins in order to compete. In perfect conditions, this can still be enough to turn a tidy enough profit, but the issue is the industry is an inherently cyclical one. It is true that many, if not most, industries operate in cycles that alternate between the propitious and the unfortunate. For most businesses, these cycles closely mirror the economy more generally. If the economy is doing well, then the chances are so are they. If people have less money in their pocket, profits are going to slide. This is of course also true of the airline industry. And in actual fact, it probably suffers more than most during economic downturns due to the fact that a good proportion of airline revenue is discretionary in nature. If people are feeling poorer, typically it's the foreign holiday that will be the first thing for the chopping block. But airlines, unlike many businesses, are susceptible to a second form of cyclicality that can also affect profits, stemming from commodity prices, specifically the cost of airline fuel. Input costs can of course rise and fall for most things, but none so quite as dramatically as the price of oil. The issue is that around 30% of the cost of any flight can be attributed to the cost of fueling the aircraft. And so it's not hard to see that if this input cost doubles over a short space of time, why this can be a major issue for the airlines from a profitability perspective. And it is often a feature of oil markets that prices tend to be higher when the economy is at its strongest, meaning that airlines face a double whammy of potential headwinds. In conditions where the general economy is struggling, they are likely to suffer more than most, but in times of economic boom, oil prices are likely to be at the highest, again hitting their bottom line. Conditions of profitability for airlines in general, therefore, have a tendency to sit in a narrow band between periods of recession and economic boom. The issue is that airlines do not have the pricing power to be able to pass on big rises in input costs to the passenger. Such is the battle for market share. If BA or Delta put up their fares by 30% to cover the extra cost of fuel, does anyone really love BA or Delta enough not instead to fly American, who have chosen to freeze their prices to gain market share? An airline simply does not have a competitive advantage large enough to be able to rise fares in line with changes to the input costs. And to make the industry an even less attractive one, we have the issue of government subsidisation to contend with. The fact is that some airlines are simply unable to be run profitably. So these airlines, normally the national airline of a particular country or the flag carrier, are helped out financially by their respective governments because the airline is considered to be of economic national importance. Because an airline is able to run at a loss, subsidisation has a tendency to drive down fares, which naturally has a knock-on effect across the entire industry, driving profits ever lower. All in all, from a qualitative standpoint, airline stocks are a pretty lousy place for your capital to be. But this is not to say that at some price point they cannot become attractive from a quantitative point of view. And if they are available cheaply enough, they cannot be written off completely by the value investor. Clearly, with all other things being equal, the value investor would choose a business that is more promising from a qualitative standpoint. But at certain points, airline stocks may be cheap enough to consider adding to your portfolio, with an important caveat. A much larger margin of safety must be demanded to mitigate against the cyclical risks associated with this industry. The overriding and interesting point here is that definite growth prospects for an industry as a whole do not always translate into profitable outcomes for the individual businesses concerned, nor for the investor. Whilst most would confidently predict that the demand for seats will continue on its inexorable rise long into the future, it is likely that this will be more than matched by an increase in available seats, driving down prices. It must be considered that not all airlines are one and the same. Certain airlines do have distinct, though arguably quite penetrable, competitive moats. This is especially true of certain budget airlines. But nonetheless, no airline can escape the fact that the industry in which they operate is an inherently unattractive one. On that, I will draw this edition to a close. I do hope you've enjoyed it and it has added something to your understanding of value investment. Please do consider adding to playlist so that you'll be informed the moment any new editions hit your platform. And do continue to spread the word so that we can make this as large a community of like-minded investors as is possible. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.